Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Thursday, January 12th. We got just one item on the economic calendar today, and that is the weekly jobless claims. Tomorrow will be kind of a big one with the retail sales, but last week we had 237,000 people apply for unemployment. Forecast was supposed to jump up back to the range we were kind of seeing at 258, and it only went up about 10,000, which is still pretty good, 247,000 people. So the after effects of the seasonal workers for the holiday season seems to be not as big of a, or at least not showing up so much in the jobless claims. So that's obviously good news that we're seeing more jobs, especially considering that we're seeing a lot of these announcements for like Macy's and Sears and limited closing stores and limiting a lot of jobs out there. So in essence, this is obviously good news that we're not seeing a lot of that going into the unemployment line here. Let's go ahead and take a look at the headline news. Stock market's down quite a bit today. Even the Dow is down about over 140. It closed up almost 100, and now it's kind of lost all those gains and a lot of it has to do with the after effects of the Trump speech. They were kind of underwhelmed in the sense that they wanted more information or more details about the upcoming policies and everything, and they really didn't get what they were expecting or hoping for. Instead, just kind of talked about media. I guess he's having those wars with the media, and addressing issues not related really too much to this policies at hand. So they were a bit disappointed. So it was kind of pulled back, and then of course he called out the drug companies about the prices of the pharmacies and pharmaceuticals here in the U.S. And of course, now their stock prices are down a bit as well. So again, the stock market's taking its cue from that, because after the election came in, they were building. The stock market went up about 9% after the post-election, based on these forecasts. And when he didn't really elaborate as to his policy plans, they pulled back a little bit. And of course, tomorrow we do got the beginning of the corporate earnings here. We'll get a lot of the banks tomorrow, like Chase and B of A and people like that, will be releasing their earnings reports tomorrow. And that's really going to be the next couple of weeks will probably be what's driving the stock market, will be the earnings reports, because they want to see what's out there in terms of where the economy is at now and what these corporations are at, and see if current levels of the stock market is at acceptable level, or if it's overbought position. And if it's in an overbought position, obviously they're going to probably sell off a bit and get more in line. Also, we do got a bunch of Fed speakers, but lately their influence isn't so much as much of an influence now. Now that the economy looks like they're kind of moving along without so much the help of the Fed, they're kind of more looking, again, the key will be looking at what the earnings reports will be coming up over the next couple weeks here. And again, most of them we're kind of seeing it, a lot of their speaking is if the economy sustains itself, looking like where it's going, easily it could be accommodated with the 3 rate hikes this year, which would be about 3/4 of a rate to the rates. So rates are obviously climbing this year. So that's kind of what the message we've been kind of hearing from a lot of the Fed speakers of late. So let's take a look here at the bond market. We're getting a nice rally here. As I mentioned over the last couple of days here, this 50-day moving average has been kind of coming down here. We got the 10-day. At some point we're going to come to close, but it looks like today we got a nice little push above that 50-day moving average, and that's kind of moving us in the right direction for better pricing. Since we had the low back in mid-December, we've gone up 225 basis points, which means basically 2.25 points. So that no point loan here, now you would get like a credit of 2.25. So you got an improvement of 2.25 points. So this is obviously rates are improving a bit here. So we were able to get back. I don't think we'll get back to the levels we were prior to that, but we'll get to a little bit more sustainable levels here. And of course we got this second resistance here. We have to be careful of here. So again, right now we're getting a nice look here. We're getting a nice rally here. As you can see, we're getting this upwards movement again after kind of going a little bit of a sideways pattern here the last couple of days earlier on. But I'm liking this so far here. So, all right, folks. Hope you guys have a good day. If you guys do want more information throughout the day, I am on Twitter. You can find me at Mike Bjork and get more updates throughout the day. But otherwise, I hope you guys have a great day. We'll look forward to see you guys tomorrow. Take care. Bye-bye.